Best bearish trade signal? At Stock Charts Trading, the implied volatility indicator is already set up for you. Just like stocks, buy low in volatility and it will go up, making you lots of money. This typically happens when price action is up against resistance getting ready to sell off. Where the top half is highlighted red, you should sell or take profits. This typically happens when price action is at support getting ready to go up. Then when the trade raises in value, the implied volatility sells off. Welcome to Stock Charts Trading Weekly Indicator Alert. This week we're going to be going over the implied volatility and how it can show you to buy the best options to make the most amount of money. In this strategy, it will help pinpoint exactly when you should buy and when you should sell options. I think you're going to find this extremely helpful, especially in this bear market. We all know around earnings dates, the option makers like to raise up the implied volatility and then quickly sell it off. And this is how brokerage firms make billions of dollars off retail traders. But good thing for you, this behavior is consistent and repeatable. And this secret's going to make you millions of dollars because you'll be able to see the tell of the option makers and be able to correctly trade that direction. Identifying the behavior of these big sell-offs over and over again creates a behavioral pattern for brokerage firms, putting the odds in their favor. So every time you see a spike or you see a dump in implied volatility, it should be telling you, ding, 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 option makers are preparing to collect in a huge amount of money. I better be watching and seeing what they're doing. Looking at PayPal 30-minute, 1 hour, we can see that earnings had a big gap and implied volatility quickly sold off. And typically you don't know which direction the price action is going to move. If you watch the earnings trading strategy link above, it'll be a great help for you. The thing we need to hone in is the implied volatility dump. So why is there an implied volatility dump here when there's no earnings? It might make sense because of the gap that implied volatility would sell off hard, but this price action was pretty insignificant compared to this big sell-off on implied volatility. So after we see a big sell-off in implied volatility, we should look at the price action afterwards to see what happened. And in this case, price action went lower. I anticipate that price action will also go lower here. Lows 30 days, 1 hour. In typical fashion, the implied volatility is high coming into earnings, then quickly sells off lower. Again, high implied volatility on an earnings release is not a good indication if price action is going to go up or down. Option makers don't care if price is going to go up or down. They are going to sell off the implied volatility anyways. And in this particular case, price action sold off lower and implied volatility rose up in value, going from the green zone to the red zone. So in the same pattern, we should expect that price action should go lower and implied volatility will rise up again. Earnings release, implied volatility sold off, but just because implied volatility sells off doesn't mean price action is going to go lower on an earnings release. But it does mean price action will go lower when there is no earnings release and implied volatility dumps lower, signaling price action is going to go lower. So maybe you should be considering Expedia to go lower down to support as the implied volatility raises up from here. Or looking at Airbnb, which is in the same industry, which has a nice double top. Last time earnings sold off, implied volatility went down, and you can see there's no earnings here, but implied volatility also sold off hard. Now that Airbnb's up against this resistance, the anticipation is that it will come back down to support of 108 as the implied volatility raises up from here. I know I keep saying should in anticipation, and so let me show you an example of what happened today. Amgen 30-day, 1 hour had a big IV sell-off, which came back up into resistance, and today sold off right back down to this horizontal support level, which you can see the implied volatility rose in value, adding to your option premium. Now that it's in the red zone, you can monitor it as it goes higher, maybe use some other targets like diagonal support line for price action to go lower. Because of the broader market, we know that a lot of stocks have the same symmetry or patterns. So in this scenario, sometimes you'll have a big dump in implied volatility and other times you'll have a small dump in implied volatility on the exact same day. It's up to you to filter through. Let me show you what a small implied volatility move looks like. And we're going to look at what happened at implied volatility at each one of these highs. Using your line tool, make a channel and take from your highs and lows of the implied volatility and draw the channel, making support and resistance. And when you see implied volatility break out of that channel and go lower, that's giving you the signal price action's getting ready to change. Using your channel line tool off of your highs down on implied volatility, Then coming down to support, you can see there's another break lower, which happened at the same time of this triple top, creating a great reversal entry as price action sold off lower. Same line tool, you can go from the bottom, come across your support levels, bring it up to the highs, and you can see implied volatility dumped out of that channel going lower. At the same time, price action started to make a reversal. This is a phenomenal trading strategy because you're able to buy cheap options right before the price rockets up and price action goes in the direction you want. And again, use your support, come up to resistance. You see price action dump lower right at the same point that price action resistance starts to sell off, making you lots of money as the option premium goes up in value and the price action goes in the direction you wanted. So now that you see that you're up against resistance, take your line tool and draw in your implied volatility channel. With the confirmation of implied volatility breaking below, lets you know this is setting up for a nice reversal pattern lower, and your option values will go up because you're buying so cheap. Now that you have the concept down, let's put it all together to best fit your trading strategy. For this trading setup, I'm going to use the stock trend indicator, the MACD indicator, and implied volatility indicator. I'm using the stock trend indicator because it shows me where the resistance is for taking a bearish trade in a bear market. In this case on Airbnb, like we talked about before, it helps identify this double top. The next indicator we're going to use to help us is the MACD divergence, letting us know that there's about to be a reversal. And of course, the implied volatility overbought oversold indicator to let us know if we should buy or sell options. Today's date is Monday, September 12th. If you want to backtrack and test these options to prove if they worked or not. For Airbnb, this is the perfect signal with low implied volatility to buy a put trade in this $27 zone. This is a 30-day 1-hour chart. Typical trade would take about 14 days. I would use the $108 level as the target back down to support. If you have a stock trend indicator and you want to use it for the support level, it shows $100. Of course, I would be cautious once it comes up into the red zone, maybe using a diagonal line against the implied volatility as a resistance level. This would be 0.65. Ross, 30-day, 1 hour. We can see there was a big dump in implied volatility. You can make a channel using the support and the resistance to draw it in. Either case, options are extremely cheap here. Stock trend indicator, resistance. MACD indicator, resistance. Double top pattern, resistance. Great place to take a trade, around $95. In anticipation for the support level of around $86, as implied volatility should raise up, maybe in this 0.5 resistance area. Pfizer, 30-day, 1 hour, going in a nice downtrend up against resistance. MACD resistance, big implied volatility sell-off. You could draw in your channels using the support and the resistance to confirm. Take the trade around $48. Price action should come back down to this $45 mark, maybe even lower, as your implied volatility option premium rises up. NSC, 30-day, 1 hour. On some of the other ones, you saw that we already had a double top, and then price action sold off lower, which you can see this small channel and breakout. Implied volatility went up higher as the price action sold off lower. This should be a confidence boost to you if you're going to take any of the double top patterns. In this scenario, we have a bear flag pattern. The red line being the flagpole, the green lines being the counter trend trade up into resistance, getting ready to sell off. Using our line tool, we can create a channel on implied volatility to prove that because we could see it dumped off lower, along with the stock trend indicator and the MACD indicator, proving that price action is getting ready to sell off from $151 back down to $235. Or you can use the bull flag flagpole and duplicate it down to the $220 level. Remember, this will take longer in time, so maybe use a month option. Now, 30-day, 1 hour. If you want to use another measure like a 61 Fibonacci retracement, going from the highs to the lows, showing that price action's right up against that resistance level, stock trend indicator, and MACD was a little early in this case. Not like this one, that was perfect. We can see the big sell-off. You draw your lines to identify the tightness as price action went higher. Implied volatility came back and then dumped lower. This would be a great trade around $471 down to the support level of $420 as your implied volatility raises up. Here's another one of those double tops. 30-day, 1 hour, coming into a high resistance, right at this old high resistance level, and a big dump in implied volatility. Using your line tool, draw a small channel off of your support levels, come up to resistance. Makes it very easy to identify that option makers are doing something, and you love it because implied volatility is low, gives you the great place to buy options cheap. So as they go up in value and price action sells off, back down to the support of $63 from $68, gives you a great place to take profits. EWW 30-day 1 hour, almost a double top, up against stock trend indicator resistance, MACD resistance, and a big implied volatility dump, making these options very cheap at 0.23. You could draw in your line for confirmation. This is a huge breakout of that channel. Currently price is at $47.80. You could use a target down to $44, or if you have the stock trend indicator, you can go all the way down to $41. Just give yourself more time on the options. Crown 30-day 1 hour, made a nice double top pattern with a MACD divergence. Price action sold off lower. You wanted to try to get out of this trade before earnings, because remember, they sell off your implied volatility, which means that's your option value being sold off. So maybe you didn't take the double top, or you got out just before earnings as the price action sold off. But being up against the resistance with implied volatility sell off, we're taking a trade at 192 in anticipation that price action will come back down to the support level of 165, possibly breaking lower. If you don't have the stock trend indicator, you can always draw in your own channel lines. Just remember, sometimes this can be difficult because there's different ways to draw them. CAT 30-day 1 hour, nice double top, MACD indicator and trend indicator showing a sell-off. That big sell-off is now making a bear flag pattern, which is up against resistance. Implied volatility had a big dump, making option premiums very cheap for you to be able to buy. I would use these old implied volatility levels as a resistance to take my profit. At least consider the price action to come back down to this support level of $180. Right now, we're currently at $191. If you were to duplicate this flagpole and bring it down, giving you a target of $165, make sure you have a long enough option, at least a month, for this to work out. Yes, this trading strategy also works on ETFs. Typically, ETFs are not known for big movements in implied volatility because they don't have earnings or pops or things like that. As you can see, using your line tool to make channels, draw in your support level, then your resistance, and you can see there was a clear break lower. With price action being up against the resistance level and the MACD indicator showing resistance, buying puts on XLB at $78.50 seems like a great trade setup. In anticipation of coming back down to the support level of $73 should yield you great profits. Here's another example of that. XLV using an ETF to declare if the implied volatility dump system works. Like this setup right here, you can see based on past results, it's hugely successful. As price action sold off, look how high the implied volatility, your option premium, rose up in value. Now, because we're all about tips and tricks, you can use your channel line in a reverse way to take profits. Draw a tight channel. Once you see the implied volatility pop above, that's signaling price action's about to change. And in this case, you can see price action started to go up. You can also use this on smaller time frames, 5-day, 5-minute. You can see the earnings. There was a big dump, as there was yesterday. In this case, price action was up against resistance and sold off lower. And so we're anticipating the same thing. Price action up against a resistance, ready to sell off lower. At $97, you could take profits all the way down here to $90 or even trade it lower. If you get a month-long option, it should raise up in value as price action sells off. On a smaller time frame like NOC 5-day, 5-minute, making a triple top when implied volatility dumped off made for a great entry point. Price action's going lower and implied volatility is raising up. Exactly what we've been talking about. So we reviewed a lot of trade setups based on this pump or dump of the implied volatility. When it breaks out of the channel below, that means you're able to buy cheap puts and price action's getting ready to turn. As long as your trading strategy shows that you're up against resistance. Don't just look for implied volatility that's low and think this is going to work. You have to have other structure of confluence to combine with this. When the implied volatility breaks above, we can see that price action come into a support level and it's getting ready to turn and start going up. If you want more on implied volatility indicator, go watch these videos here. Otherwise, before you commit money, at least demo trade it a couple times to get familiar with the process to confirm for yourself that this is a winning strategy that you should add to your trading strategy. As always, I wish you the best in trading.